Hey there, Press.
Hey, what's up?
Nothing much. How are you?
I'm great, and how are you?
I'm good. So, guys, today um, you have Lisa J. Stocks and Investing with Prez, and we're going to be talking about beginner investing. So, please feel free to drop your comments, let us know you're here watching, and we're going to start to get into it. So, let's briefly introduce our topic as to what we're going to be chatting about. Um, now, well, let me let you introduce yourself a little bit and kind of let us know where you're at with your investing, where you would describe yourself when you got started as a beginner.
As far as me, I started investing in I want to say the end of 2020, like right after the COVID drop. And right now, I'm starting my channel based on I created a portfolio for the channel so that I can show beginner investors exactly how it looks from week to week.
Okay, okay. So prior to that, were you just doing your 401k or what is like your investing journey in total?
Prior prior to 2020, I wasn't doing any investing at all.
Okay.
Um, I was at work listening to a video in my ear. I was listening to Rich Dad Poor Dad, the audio book, and I had my earbud in at work, and it kind of got the gears clicking in my brain, like I should be looking into some of this stuff. And right after that audio book went off, I started listening to different videos by Robert Kiyosaki. He started talking about Bitcoin, Bitcoin, Bitcoin. So I started doing my research about Bitcoin. So the first thing I actually started investing in was Bitcoin.
Oh no. Well, guys, let me tell you something. I know for sure that our investor beginning basics is not going to have you starting there. Am I right, Prez? Prez, can you hear me?
No,
You didn't hear what I
right.
said?
Do not start in
Right.
Bitcoin.
No, we're not gonna tell you to
Yeah, I
that's
can hear
not
you.
gonna be that's not gonna be our
Yeah, I said,
encouragement
yeah, do
today.
not start investing in
Yeah.
Bitcoin. No,
Okay.
I would
So I
not
would say
recommend that.
all right. I think we have the same kind of money mindset and investing mindset. So I'm not able to see the chat on my
Mhm.
screen. I don't know why it's bothering me, but of course, once you go live, that's what it is.
I
But
see
okay,
one
so
comment.
yeah, but
I
there's
see
definitely
Blue Lotus.
there's more than that. We're not seeing it. We're not seeing it because it's coming in and I'm not seeing it. I'm seeing it on my phone. But let's get back to it. I'm sorry, I'm a little distracted. So my investing
It's okay.
was just my 401k and I really wasn't paying attention to the performance and what am I invested into, but I was
My
always
investing.
contributing to it.
Um,
But Uh, similar to Prez, it's been about 5 years now that I started to invest on my own and choose my funds, my ETFs, my stocks, do some well, let's just leave it at that because this is a beginner focused live stream. So, let's start by talking about um and also just a few years ago, something else that I started to do was to invest for my daughter. I always like to share that because if you're in a place, I always want to make sure that you know that that's an option that we can bring the kids, grandkids, our young people into this early, not when they're 25 and getting into their career. But let's start talking about beginner investing strategies. And with that, I think that both of us build our portfolio on a strong base of ETFs. So,
Correct.
and I already know, but why don't you share a little bit about your favorite ETF and what is an ETF, if you don't mind taking on that part of the conversation?
That's easy. A ETF is basically a basket of stocks. So you would see the price of the ETF and just know that it's a basket of stocks included in that. And most ETFs pay either a monthly or a quarterly dividend. So not only do you get that basket of stocks inside of that one price you see on the screen, you also getting a small kickback either every 3 months, every month, however the ETF is set up. And my favorite ETF is, of course, VTI. VTI has over almost 4,000 companies inside of that basket.
Okay. All right. So let me just quickly show that. Um, Okay, it might be a little hard to for you to see, but I'm gonna just read it off. So, like Prez was saying, this ETF, it currently has 3,760 different holdings. So you're getting a little piece of all of that by investing into VTI. And then here are the top 10 holdings currently. This is going to change with what's going on with the particular stocks, the different companies. So right now, number one is Microsoft, Apple, Nvidia, Amazon, Meta, Google, as you go down the list. So that is what Prez was describing. And with investing into this, it gives you a diversification into lots of different sectors. So you don't have to be out here trying to pick what is the best tech stock, what is the best energy stock. You're going to get a little bit of all of this in that. Now, when you invest into an ETF or an index fund, something like what we just showed, there is a management fee associated with that, um, which is called the expense ratio. And another thing that I think that we both like about this fund that gives you exposure to the total stock market in one investment is also that it has a reasonable expense ratio of 0.03. Do you agree with me on that, Prez?
0.3%.
Isn't it
Yeah, the
0.03?
expense ratio on VTI is 0.3%. That's the lowest expense
Mhm.
ratio that I could find.
Yeah. Actually, I did find something that's lower, which is FXAIX, which is something that we can get exposure to at through Fidelity. And also they have a total stock market fund there. But this one you can is
Okay.
more accessible in different places. But yeah, I did talk about this the last time. I always try to touch on this because uh, knowing that I don't want people to get into things where they're paying 1% or half a percent and they think that that's a reasonable amount to be paying for a managed fund, because I think that that is high and very significant. So what any thoughts on that, Prez?
As far as the expense ratio,
Yeah.
um,
Would you get into
I
something that
just
was
like
a
VCI.
1%? What would you get into something that was a full 1%?
No, I wouldn't.
No, no,
A
okay.
full 1%, no.
Yeah, yeah, no,
I'm
because
trying to keep most of my money.
exactly. That is the point I'm trying to drive home here. So I guess we touched on the advantages of. I don't know why we can't see the comments on the screen today. What is going
Yeah, I
on?
can't see on my end either. I had my phone pulled up.
All right. Yeah. So let me just say hello and thank you to everybody that's coming in. I see Nora, Blue Lotus, Rooted, Kevin, the Realist. Thank you, everyone. Miss V, Tay. Thank you guys, everyone, for checking in. Please, I'm gonna have to be looking to my phone, but if you do have questions or comments, please drop them in here. For some reason, the only person that's comments that wants to show us is Blue Lotus. But
Right.
let's keep going. Let's keep going. So I know your favorite is VTI, but let's talk about some others and what they bring to, investing. What is your feeling, or why is VTI a little bit more? Why is VTI your favorite? Is it because it's a total stock market? Is it because well, let me stop there and let you talk a little bit more. Is it or I was going to add this, or is it because of the price per share is kind of easier to build your way up than a VOO, which is, a few $100s instead of $200?
No, my personal reason why I love VTI so much because it's the total stock market. It takes
Okay.
out all of the guesswork. Plus, I love my individual companies, so I get my exposure through my individual companies on my own, on top of having VTIs being 60% of my total holdings.
60%. All right. So for
60, at
my
least 60%.
yeah. So for my daughter's portfolio, I do 80% um ETFs. So I like that simplicity. I like that, it's an easy choice. It's stable. It's going to build. It may not build as fast as other things, but she has time. And many of us that are in our 20s and are, building our retirement fund, we also have that. We have time on our side. So, um, I think that another thing I want to touch on is the importance of getting started early. Do you have anyone in your life that you're trying to influence now, knowing that you just started about 5 years ago yourself to get started early?
I'm trying to get my younger siblings. It's like pulling teeth, though. They'll come around once they see the success that's gonna come in the outcome. Like I'm in my 40s and I have siblings that's in their early 20s.
Okay.
They'll come around when they come around, though. I'm mainly focusing on like that little brother I never had that's out there watching that could stumble across one of my videos and like I need to get into this. Maybe they'll have that aha moment like I did.
Yeah. All right. So this is VTI currently. And you see here it's the Vanguard Total Stock Market Index Fund ETF. I'm sorry. So as of when it closed, the market's closed tomorrow because it's a holiday. As of when it closed on Friday, it's $248.46 per share. But what I also want to get into is buying fractional shares, because I don't want people to think they have to wait. They have to have $1,000 or several $1,000s to get started with this. So let's get into something else that you do and I do, which is building up our portfolio by buying fractional shares, buying just a little piece of this, little by little, either by dollar amount or by share size, until we can achieve one, two, three, however many shares that we are trying to get to. And I hope I'm not going on too much about painting that picture, but many of the platforms that we both use, you can do that by investing as little as $5. So how do you
Mhm.
invest into VTI in this new portfolio that you're sharing over on your channel? What is your schedule on it?
I'm doing $5 a day and I allocate it based on I'm paying attention to the weight of the portfolio. It's in little percentages. I wish I could pull it up and circle it, but it's in percentages. Like I look at VTI, say 59 point whatever percent, and I know next week coming up, I need to be putting money into VTI versus anything else.
Okay.
I have the mindset of a pyramid. I'm building a pyramid brick by brick. The bricks are the $5 bills. So I'm building the pyramid brick by brick. The foundation is VTI. That's the first level. You can cut the pyramid like 5 ways coming up vertically. And VTI is at the base. Then I have my other companies like Azure, your tech stocks, Apple, Microsoft, what have you. I have them on the second layer. And they're allocated in percentages as well, but they're much lower than VTI. That stays at 60%.
Okay. So, Blue Lotus is asking, what is a good dollar to start with? And I see that Rooted is saying, I want to do a $5 day. I can afford that. So let's talk about um, I also do VTI on a daily basis. I've been doing it for over 500 days. I'm going to do a video, I think, this week, giving you an update on what that has done. And I do $5 weekdays, not including the weekends, but pretty much every day that the stock market is open. And if there's a holiday like tomorrow, I'll probably make up for it and still do my
Make up, yeah.
$50 this week. But that is my minimum that I do is into this particular one, which I as Prez shared, this is one of his favorites or is his favorite, VTI. So I've still been doing my $10 daily into this. So with that, what I want to stress with sharing this is that you don't have to wait. If you have $10, once you get some money, get your account set up, get it funded with your initial amount, like, I can do this. I can do it. Investing daily, some people think it's a bit much, but it works for me. And there are ways to automate it if you don't want to have to physically remember to go in and do it. But uh I do it daily. It works for me. You don't have to wait. If you have your first, if you're going to do $5, if you have $25, you can send your $25 in weekly and invest your $25 weekly. That's what I'm saying, is that you don't
Right.
have to build up a huge amount of money. You can just schedule either on payday, say if you get paid twice a month, you send in your $50 every paycheck, and then you have your money to do your daily investing. Now,
Right.
again with the daily, did you lean towards doing it daily for the dollar cost averaging, not having to worry about the price fluctuations, or what made you lean towards doing it daily as opposed to um, what I'm sure many people well, let me I'm sorry. Let me let you talk on that a minute.
I chose to do it daily because it one, minimizes the risk. Two, it builds habit of consistency. Like,
Mhm.
I actually put my order in the night before I even go to sleep. I got the order already in. So when I get up the next day, no matter what, as soon as the market open, I know that order will be filled.
So what other well,
I was
let's
doing
stay
the
on that.
automated thing, but sometimes like life happens and a bill might be coming up. So I might turn the automated, set it and forget it off and do it manually. But for the most part, I have it on automated as far as when it actually funds my account.
Oh, see, I see Goddess D is asking, can you pay monthly? Yes, you can fund your investment account, monthly, however you want. For me, it would be too much to fund it daily because it would be pulling from my bank account into my investment account. So I usually do it like weekly or bi-weekly, and then I have my money to invest. And as I said, both of us do it daily. But it's up to you. You are the person who's going to be managing your portfolio. And I don't want there I don't take any excuses when it comes to investing. I know that there has to be some way that it can fit into what you need. So what apps? Rooted. What apps do you, outside of your I have my retirement accounts and my daughter's account at Fidelity. Outside of that, some platforms that I use are Webull, MooMoo, and the Public Investing App. I have links to all of those in my description. What are you doing, Prez? Where are you doing your $5 daily into VTI? I'm currently doing that one on Public
That's where I'm at. I'm using public.com for my
for that.
channel portfolio. I
So
use
that's
Webull
all
for
I
trading mainly,
Mhm.
and I use Fidelity for long term things that I'll probably never sell. and Fidelity.
Yes, okay. So kind of similar to me. I'm using Fidelity for, that's where my current company that I work at, that's where my 401k is, that's where my IRA is from previous companies that I've worked at, and that's where my daughter's investment accounts are also. So I think that um, all the apps that I mentioned, I think that they all have the things that you need. But my real one that I do use, where I have over 20 of my investments at, is Webull. And I've enjoyed using that because some of the other apps were catching up with some of the features that Webull already had. Um, like Public has just gotten into having options, and like I feel like Webull is a starting place where you didn't have to wait for it to grow into what you need. It had the functionality already. They were kind of ahead of the game on certain things. And I got into investing just a few years ago, so I was never one to use Robinhood. So I'm not familiar with that. I couldn't help with any questions at all related to Robinhood, but I use I use Webull often, and I'm familiar with how to set up the recurring investments and investments, as well as deposits, in order to fund your investments and to navigate the app, because I've been using it a lot over the last few years. Um,
I
sorry, I have to
personally
look
use
down.
Robinhood for funds that I need to access, like right now. I need to take a quick trade and I need the money tomorrow. I'll use Robinhood for that because Robinhood has a debit card to where as though I can transfer from my brokerage to my spending account and swipe the debit card. I don't have to wait for a withdrawal to hit my bank account or anything like that. So that's the
Mhm.
only reason that I use Robinhood for. Like I need a quick couple bucks. So I'll go and make a trade on Robinhood real fast and I know I'll have that money tomorrow on my debit card.
Yeah. So I think that you need to just figure out where your needs are. What is lacking? Do you have a retirement account? Do you have a 401k? Does your employer give a match? Are you on track for what you think you're going to need for retirement? I always like to give that type of encouragement, because it's I I'm doing both. I'm doing my retirement account, but I do invest on my own. I have multiple accounts because I would like to have some money that I can tap into before 59 and a half. But everyone has to evaluate what your particular needs are. Um, Especially if you're getting started with investing later in life, I think the focus just has to be getting ready for retirement, maybe not thinking about things that you're gonna be tapping into, like being doing trades and trying to get quick money. That is not what I'm here to share, because I can't share that. If I was able to make the quick money, and just I knew what to tell you to get into, in order to do that, I don't think any of us would be working. We would just be day traders, just sitting at home all day. Right, Press?
Right. That's a roller
Okay.
coaster ride. Trading is a whole, you had to put on a different hat and you have to learn how to keep your emotions in check when it comes to trading. Now I noticed a question. I seen a question where to go to get started with apps that they use. Now, a lot of people recommend MooMoo and Webull because they have the promotional deals. But I would personally recommend, and this is not financial advice, I would recommend Public. It's very user friendly. It's like ABC, pick, click, buy, sell, and you can just buy and hold until you get your foot in the door as far as learning how to trade and how to evaluate companies, things of that nature. You can start with public.com. It's really easy. And then I saw another question: what's the difference from with fractional shares? A fractional share is like putting a share on layaway. Like I don't have enough. I don't have $400 to buy Microsoft, so I want Microsoft now, so I'm gonna buy $5 worth. And as it decrease or increase, I'm going to dollar cost average into it. Every Wednesday, I'm about $5 worth of Microsoft. That's how that works.
Yeah, Rooted, the S&P 500. What's the difference between S&P? So the S&P 500 is the 500 top companies in the US. And then fractional shares is buying a piece of a particular ETF or index fund that holds those 500 companies in it. And we're sharing that with you guys because we don't want you to think I have to have the full amount of a share in order to get started investing. So let's take a quick look at VOO. I'm sure it's, let's just look at it so I don't have to guess. All right. So this is VOO. Vanguard. There are other ways to get exposure to the S&P 500, but this is VOO for an example. And it's $459 per share. But you can invest into it. Don't feel like I have to have that to get started to buy my first one. $5, $10, $25, whatever your budget and whatever daily amount you want to invest into it, you can get started with that. I know that another thing that Rooted has said that he wants to potentially have in his portfolio is Apple. Same thing with that. It's $182. The way Prez was explaining, he would have 60% into a broad ETF like the VTI or a VOO, something like that. And then from there, you do smaller percentages into individual blue chip stocks that you may want to have more exposure to. Apple is something that I have in my portfolio because I wanted to have more exposure to that. Google, Tesla, but predominantly a large portion is into the ETFs that give you the hundreds, if not thousands, in the one investment. But I guess, does Apple
Does
have
Apple
fractional
have
shares?
fractional shares?
Yes, yes, you can buy Apple.
Yes,
You can
Apple
buy
does have fractional shares. All of the companies, a good 99% of the companies
yes,
have fractional shares.
yes. So that's it. Say if you
That
had
was it.
50, you say if you I agree with what Prez said, that most everything that you are going to know and think of, yes, you can start to invest into it with fractional shares in all of the platforms that we've mentioned. And even at Fidelity, they have that too. I've invested $2.50 into my daughter's account. I think that I keep sharing that because that might be the lowest amount that I have ever invested. But, if I have $50, I'm going to do 20 into two 20s into her ETFs, and then maybe a $5 into one of her blue chip stocks. And then I had two more of her blue chip stocks that I wanted to do. So I split 250. And that's it. She had $50 investment on that particular day. And I was able to build her account a lot with money that I had gotten from the stimulus over the years, and money that, little money that she got from holidays, Christmas, whatever, and just regular savings. But I want to make sure that her money is working harder for her so that, it's growing in a different way. I want to just let's get into the difference around saving versus investing and what the benefits of that is going to be long term. So, saving.
Saving is for losers.
Most of us are just regular working people. We're just making our paycheck and that's it. Some of us, we're entrepreneurs. We get into some spectacular thing that brings in a large amount of money, but overall, most of us are just regular, go to work, earn our check. We have to make that money work as hard as possible for us so that it can grow in a different way. And saving at your local bank or credit union is not going to do it. You're going to be getting a little couple of cents here and there. Let's go back
Inflation
to
gonna eat it
let
up.
yes, yes. So another thing I wanted to touch on today with beginner, not it's not, and using a high yield savings account is not an investment. That's savings. But I want you to have that, but all of our money, I want it to be working for us. So I definitely use a high yield savings account. I happen to use Discover, but there are many that you can choose from where you're going to be getting, 4 or 5+% as opposed to a little piddly 0.01 or 2 or whatever at your local bank. So just to go back to what we were looking at. Prez's favorite, VTI, going back up. Let's start with the 5-year. Up 72, nearly 73% in 5 years. 1 year, up 23.72%. Now, every year is not gonna be the same. There are gonna be, downturns, and we go through the bull market, the bear market. There's gonna be ups and downs on the stock market. But we're talking about being an investor, beginning to be an investor long term. 5 years, 7 years, or even more. If you're in your 20s and we're talking about when you're 60, you have time to let this money grow. And I want you to really get your head around investing long term can build wealth in a different way. Definitely having your money sitting in the bank year after year is not going to do this. Get a handle on what is your bank account, even what is the interest rate on your savings. And I think that if you really take it does take time. I know it does take time, it does take work, but it's worth it in the long run, and I don't want people to just keep on putting it on the back burner and letting year after year pass. This past year, the S&P 500 is up even more than what we just looked at with, VTI. Let's see, 1 year. The S&P 500 is up 25%. Can you imagine if you started to put your money into that instead of letting it sit idle, if you have any money sitting idle? And if you do have your money invested, make sure that you're taking a look at it to see what is the performance of your investments. Is it similar to the numbers that we're sharing in the past year? Because if it's not, then maybe, especially if you're younger, you need to make some adjustments there, because I'm not about being so conservative that I'm not at least moving with the market industry current average. What do you think about this, Press?
Yeah. Time in the market beats trying to time the market. Don't be don't be one of those ones, or I'm gonna wait for my income tax to come and you don't bought a new car. Or I'm gonna wait for my settlement to come and you done bought a new washer and dryer. You could have been taking
Mhm.
something as small as $25 a week, $5 a day, 5 days a week. That's uh, a soda and a candy bar every day. You could
Exactly.
have cut out,
Mhm.
or a cup of coffee you could have cut out, or you could have made your coffee at home that week and invested it. You could look at a company like Nvidia. Nvidia just been on a rocket ship the last few months. I remember just a month ago, Nvidia was $400. This is almost $800 now. You could have
Yes.
picked that
Yes.
one, even though it's a little more high risk, and I wouldn't recommend starting there. But that's just an
Okay.
idea of how your
Yes.
money can multiply if you put it to work instead of
Mhm.
either
Mhm.
wasting it or leaving it sitting idle in a savings account.
Yes, we don't know what is gonna run up, to those extremes. Uh, that's why I think we've both chosen to have our foundation into something reliable, the whole stock market. You're getting all the names that you know are gonna be in that top 25,
Right.
Google and Walmart and Apple and all of those type of things, Tesla. you're going to have exposure to all of those type of things, and things that you may not know exactly what company it's in, like Eli Lilly, but we all know the type of pharmaceuticals, these injections that people are currently using for diabetes and weight loss. These are the type of things that you don't have to worry constantly about your investments. You can sleep well at night. I don't think Prez has anything in his portfolio that keeps him up at night. Other things might keep you up at night, but I think
Yeah.
your investments are not the things that are causing you. Me either. I don't have, my investments are not what keep me up at night. I can sleep well with the choices that I make, and the things that are a little iffy, I have ways in place. My stop loss, which is something that I use, we can get into that. But overall, my long-term investments, they're there if it goes up, if it goes down. They're not things that I'm turning my back on. Those are things that I feel I've chosen, and I put them in my portfolio knowing that I am comfortable with holding them long term. Uh, Microsoft, Apple, those type of things, I don't foresee. You have to keep up with the news on your own, but I don't foresee any drastic issues that would have them wanting me to cut them completely out of my portfolio. It's very rare that I sell something. I'm an investor, long-term investor. I'm not here, we can talk about that maybe another day. I'm not here today. I'm talking about getting started, getting consistent, giving people an idea of what you can do in order to get started. If you're working at a job and they don't provide you with a 401k, know that you have to do it on your own. You can get in touch with a broker. We both happen to use Fidelity, but you seek out a broker that is right for you, and you can open up an IRA, and you have to create that for yourself, because without that, you're not gonna have this opportunity to build wealth that you're gonna need in your later years in life. We don't want to just be dependent upon Social Security or disability, in my opinion. Do you all agree with me in the chat? Prez, what do you have to add to this?
I definitely agree. You know what I always say, the famous Warren Buffett quote: "If you don't find a way to make money while you sleep, you're definitely going to work till you die."
Mhm, mhm,
Ain't a whole lot to that. If you don't want to work till you die, you want to learn about taking control of your what's the word I'm looking for? Your own financial journey. You want to, yeah, get started on your own financial journey and take the time and do the research. You can take 20 minutes, listen to a video, one of our videos, somebody else's video while you're working. And when you sit still, you can do your own research, of course, as far as what the actual company does. But the safest way to get started is in VTI. They're doing the work for you pretty much. They're already doing the work for you. Is like we said before, it's almost 4,000 companies inside that one basket. So that's the safest way to go, getting started. And then you start looking into your Apple and your Microsoft and your Meta and your Netflix and things of that nature.
mhm. I do it that way, Prez does it that way, but if you're just getting started off, don't even feel like you have to do that. You could just do, like we're saying, a VTI for a while before you say, "Oh, I think I wanna do," some Nvidia or Apple or whatever, because know that the companies that we've mentioned are inside of VTI. So you're getting some exposure to that anyways. You're going to get paid a quarterly dividend, which is also going to be money that you can reinvest and just continue to build up your investment portfolio with that. Um, so how long have we been going? Ooh. So let's talk a little bit about the current economy, like coming into I did a video recently about it being an election year. And just overall, we started off the year rather strong. We seem to be coming into the bull market, which has some people that have been consistent with their investments are obviously happy of what about seeing the way their portfolios are looking very strong. But I want to get into,
Mhm.
is it too late? If there's anyone in the chat that has not been consistent with their investing, that's just ready to get started, it's never too late. Um, the S&P
It's never too
500,
late.
yeah, the S&P 500 recently, I don't know how many times this year, but over since the 1950s has hit new all-time highs over 1,200 times. So don't hear in the evening news that the S&P 500 hit an all-time high. Don't let things like that turn you off and feel like, "Oh, it's too late for me." Because you know what is gonna happen year after year after year? These companies are gonna continue to grow, and there's gonna be a new all-time high over and over again. So I'm just saying all that to say that, and there's gonna be ups and downs, there's gonna be fluctuations, but make sound investment choices. We can look at some, if anybody wants to drop anything in the chat, we can pull up some other ones if you wanna, if there's anything that is on your radar, if you wanna take a look. Prez is great with stuff like that. If we wanna look at the expense ratio, the performance, maybe we could take a quick look at
Mhm.
some. I have some other ETFs listed here, other than the couple that we've mentioned. But I just want to give that message that I don't think it's ever too late. I'm glad that I've been consistent with my investing, especially throughout from late 2022 and throughout 2023, because I thought the recession was coming, it was coming, it was coming. I guess it's still not here yet, but there were very significant dips even back in October in the S&P
Mhm.
500, and I was there still taking advantage, investing consistently, weekly, daily. I don't have all of my commitments cannot be daily, like my $10 into VTI because my budget doesn't allow for it, but I don't let a month pass without me building up into, the things that I'm trying to add to my portfolio. So, what do you consider? What is your thoughts around considering getting started, not feeling like it's too late, and continuing to invest even if we are uh, in a bull market?
As far as where we are in the market, I'm getting to the fearful state. You know how Warren Buffett says, "Be fearful when others are greedy, and be greedy when others are fearful." While everyone now is being greedy because the market has been ripping, been making new all time highs about 3-4 times a week lately. I'm at the point where
Mhm.
I feel like we're due for some type of correction. Um, some profit taking needs to take place for the market to come down a little bit more. Well, that's what I'm shooting for because I personally enjoy the bear markets more than the bull markets because that's the time to accumulate. So when the bull market do happen and you see that everything's on a 20% gain, you have enough of it now because you was buying it the whole time while it was down in red. When everybody was
Okay,
running from
Prez.
it, you was running to it.
Okay.
Now you seeing the real power of compound interest.
Okay. Prez wants his investments on sale. But what I'm saying is, w- we all start at different places. So we're not all going to be able to have that opportunity to, start investing into Apple at $120. So we
Right.
got to just know we got to start from where we're at. But in my opinion, start. Don't let, these things continue to hold you back. Don't let fear or uncertainty hold you back because listen, we know that the whole stock market is not going to crumble. We know that the Fortune 500 companies are going to continue to be strong. So don't just have your money sitting idle, not working for you, is my opinion. Uh, and I don't know.
It's gonna be gone. You can
So
let
let
your
me
money
go.
sit idle if you want.
Yes. Let's go
It will
through
be gone.
some notes I have here about historical growth. I've already touched on it. Historically, the S&P 500 goes up at least 10% per year. There are gonna be some outlying years there, but last year was an outstanding year. It was over 25%. So we gotta realize that, we need to just move forward with our investing. Another thing is compound interest. Compound interest is on our side. And, you know, if the average is 10% and then you have these years mixed in there where it's 27 or 19 even, all of these different things, year after year after year, this is what you need to tap into and take advantage of in order to build wealth. Uh, also,
Hey Lisa, do
like I
you have a
said,
way to show them the investment calculator?
yes, I can bring that up. You chat for a second while I bring that up, Prez. Thank you. Maybe,
The investment calculator is a way that you can pretty much calculate how long it will take you to get to a set goal of monetary value if you stay consistent with the power of compound interest.
all right, so
So
let's come
basically,
up with
like she
this.
says, the market basically has a 10% average annual gain. And here it is. So if you was to start with a certain amount, let's say
Let's make something that
$100.
is friendly for everybody that's watching. Come on, Prez, give me some numbers here.
Okay, start with 25 bucks.
We're gonna start with $25
That's week
after
one.
10 years. How many years we gonna do this for?
We can start with 10.
10
Start with a
years?
minimum,
Okay.
10 years.
All right. And as we've the things that we've looked at so far, nothing gave a 10% rate of return on the year. They were
Distribution would
substantially
be,
higher. We're gonna do an additional 25 per or what, 100 a month?
yeah,
That sound good?
monthly.
All right. So, guys, everybody understand what we're
Yep, that
looking at
sounds
here?
good.
We have, yeah, I hope that this is not
Drum roll.
all right. So after our 10 years,
10 years.
we've contributed $12,000 and we have interest of $8,026.23.
That's $5 a day. It's better than what you had in your bank account, but you ask me.
Now, imagine if you could do that for your kids or the young people around you. 10 years. A lot of us, I was doing a show with Robert the other day, and he mentioned his 3-year-old nieces. After 10 years, this is what you could do for them without much effort. And it doesn't just have to be the parents, the grandparents, the aunt, the uncle. I think that most families could keep up with what we just showed. It's just a matter
Mhm.
of if they've ever given it a chance. I think that people are not giving, investing a chance long term to see the results. I've shared a particular portfolio from a job that I worked at about 10 years ago. And during the time that I worked there, I contributed about $40,000 into what was then my 401k. The interest alone is now over $40,000. So basically, it doubled on its own because of the particular fund that I was invested into was a big factor into it. But There's no way. There's no way. If I wasn't allowing that money to be withdrawn from my check and invested during the time when I worked there, as well as letting it stay invested for the last 10 or 11 years, there's no way that I could then save on my own $80,000. Absolutely no way at all. I am sure of that. So, let me just check the chat. Fearful. People are okay, so I wish I could see put up some of the comments that I'm seeing, but they're on my phone and not in the chat that I can put up on the screen. Only a few people. It's funny. It seems like it only the people that we just had the meeting with that are in our chat? Because I'm seeing Blue and Rooted
It
wasn't
seemed
there
like it.
today. Rooted wasn't in our chat earlier, I don't think. But anyways, so I have a comment from Al saying, without financial education, most people are extremely fearful of investing in the market. So what can we share, Prez, to make people feel that even with the fluctuations, overall, the market, in our opinion, is a way to build wealth in a reasonably safe way. I think most every employer has, uh, you know, some type of 403b, 401k. Is it really a fearful thing to invest?
No, it's not. Um, I think a lot of people's reason to why they aren't investing is one, they have the casino mindset. They're waiting for the
Fast
lottery.
money. Mhm.
You're not going to hit the lottery. If you do, the IRS is going to take a lot of it. And what's another one? I had it on the tip of my tongue. Give me 1 second. Lost my train of thought.
Yeah, guys, fast
Wait a
money.
second.
It
Fast
may not
money.
happen for you, but give what we're showing here a try and look back after. I know I think that's the thing that I think most people are not doing is giving it the 10 years, 5 years, and then looking back. But guys, if you're not investing yet, I want you to get on board, and I don't mean for a few months and get turned off and give it, and just throw in the towel. Let's give it a shot. Let's commit to a long stretch of time. Like I don't Prez just got
Oh,
started
I
with a new
got it.
portfolio, but I've been going for over $500 into VTI, the ETF that we were talking about at the top of the show. And throughout the show, we've been touching on it. And I'm going to pull up what percentage I'm up after 500 plus days. Uh, but Prez, yeah, continue. Let me see. You can see
Less
the chat.
entertainment, more education. I'm gonna say that again. Less entertainment and more education. Like, never mind what's going on Raising Canaan or the Real Housewives or whatever. I don't know what shows y'all watch. 'Cause I don't watch any of them.
I watch
I
Raising
dedicate my
Canaan.
free time to. I dedicate a vast majority of my free time to educating myself on what's the state of the market, what's going on in the economy, what companies should I be looking at, um, where my money will be most safe at now, where the next opportunities are. That's where my mind is focused at. If I'm not working or sleep or eating or showering, I'm thinking about educating myself on how to make my money work harder.
And okay, so let me just share. So my VTI is up 18.3%. But that doesn't happen overnight. There probably were many days in there, especially when I was first getting started, where I might have been in the negative, red, but consistency and going through the times when the price did dip down, but still every day with my $10 investment, it gave it time to get into this place now where I haven't dropped below, um, say, even 15% in I don't know how many weeks now. Like certain investments that I've been building into for years, they're just in a solid place. Like, for example, my Amazon and my Amazon, Apple, things like that. I've been slowly building into them. Uh, and they're just in a solid place. The companies are having, you know, reasonable earnings. They're just in a their stock price is pretty stable, doesn't fluctuate crazy like the Teslas or the Nvidias. Nvidia's fluctuating in a great way, the way it's going up. But I
Mhm.
really didn't have a I hadn't built up a position into Nvidia prior to it running up the way that it did. But don't let anything about investing intimidate you, because it doesn't have to be hard. You don't have to make it, there's ways to simplify it. There are basic knowledge that you can have. You can manage your own portfolio. You don't have to think you have to spend a bunch of money to have someone do it for you. Even if you are, using a brokerage company, I want you to go and make your investment choices with some knowledge, with, seeing how you can go ahead and compare your performance. Know what you're getting charged for fees on your investment choices. Know if you feel like they're being too conservative, if they have you in a high amount of bonds. And that's all going to depend upon your age. If you're about to retire in 5 years or so, you have to know where you're at in life and make sure that you're in tune with it. Seek out guidance from them, but you have to have an idea of what you're looking for, so that you have to realize with everything that we do, we don't just go with a blank mind that the person that is supposed to be assisting us is going to give us guidance that's in our best interest, because they are salespeople. They have their bills to pay too. So we have to arm ourselves to be an advocate for our best benefits, if you know what I'm saying here. And I know I'm kind of rambling on.
Don't be
Prez,
like me and start high risk in Bitcoin. Don't be like me and start high risk in Bitcoin or a hype stock you might see on YouTube, like GameStop or what have you. Don't start
or
there.
Ru-
Start with
or
something
Rumble,
safe.
which we've been having some
Yeah, or
conversations
Rumble. Don't
about.
start with Rumble either. I know Rumble had a nice little run up, but I think
Yes.
that run up is probably over for now. It
Well,
needs to cool off.
with this, who in this election year, we shall see. But listen, our encouragement is, let's focus on the basics, and then what percentage, let's throw out some percentages for speculative things in crypto. What is your opinion on that? And as we say, this is just our personal opinion. We've been at this for a few years, and we're here to share the success and the mistakes that we've made. I've gotten into some things that I went too heavy in my portfolio. Some
Yeah,
things that, so you saying you started off with crypto,
high
but
risk,
now
very high risk.
but now you are 60% into VTI.
VTI.
So,
Hmm.
guys, same thing with me. I happen to have something that, I was into all kinds of things. Oh, we're not the all the airlines are, everything was shut down. So let me invest into JetBlue, and let me invest into ChargePoint, and lots of different things. Some of those things were too
Yeah.
highly weighted in my portfolio. But listen, you guys don't have to do it the way that we did. We already did that. And no, we can tell you, yeah, it wasn't working out so well for us. VTI,
Mm-mm.
VOO. If you're at Fidelity, things like FXAIX, these are solid things that you can build 60, 80, even 100% to get started. But I don't know. Prez, what else do you want to add to this?
Um, to the people that's skeptical about ETFs, the safest individual company that I believe that you can buy is Apple. You can dollar cost average into Apple and just have Apple for real. Of course, you got the risk and fluctuations of the price when they report bad earnings and things of that nature, and you are not diversified, but it's still a safe investment.
Mhm. Yes, Apple, but Apple, I have, I would say probably about 52 shares of Apple. That's one of the things that I definitely was before I started to shift into more of the VTI, VOO type of investments, Apple was over 50% of my portfolio. It and Amazon
Wow.
and other things they were yeah, I've been carried away over this, pandemic and lockdown. Apple turned out to be one of my favorite things to invest in, and it did not
You was
disappoint.
Apple aggressive.
Yes, I was. Um, but it turned out well for me, but we have to realize still we're given the encouragement of, do the ETFs. There are some companies, Microsoft, Nvidia, there are companies coming Microsoft has already surpassed Apple, so it may not always be in that. It's currently not in that number 1 spot. Who knows in time, it will still probably be up there in the top 8. But yeah,
Yeah.
some of these companies are coming for that spot in the top,
Yeah. Microsoft and Nvidia look like they about to be battling for 1 and 2.
Yes, yes. All right, so we're coming up on an hour, Prez. Thank you so much. Is what else do you wanna get into? Do we wanna wrap it up or do you wanna keep going a little bit more?
Um,
Guys, really, if you guys wanna us to take a look at any stocks, are you okay with that?
I'm fine. I can go as long
Okay.
as need be. My
If
schedule's pretty
anybody
clear for
has
the day.
any index funds or stocks or anything that we wanna take a look at, you can drop it, in the chat. I am looking at the chat on my phone and trying to see if I've missed anything.
When you dollar
So
cost average, the fluctuations don't matter. I'm reading a comment in the chat. He says, "Save to invest. That way, the fluctuations won't matter because you don't currently need the money." I say, just invest it. Have your
mhm.
separate savings for emergencies, of course, but continue to invest. Just be consistent with it. You don't worry about fluctuations anyway, because 10, 15, 20 years down the line, you're gonna be way up.
Okay, yeah, these are
Berkshire B.
someone is dropping some things in here that I am not familiar with. I don't think that these are, uh, ETFs or index funds, but let's
I
see.
see Berkshire B, and I don't know what that other one is. The one in the middle, the second one. It looks like Kenvue and Occidental Petroleum. Um, I don't really like Kenvue. They was a part of Johnson and Johnson when they did the spinoff. It put a bad taste in my mouth, that whole spinoff thing. It should have just stayed all under one banner, I think. Occidental Petroleum. Um, that's a good small investment. I will have about 2% of my portfolio allocated to Occidental Petroleum. That's about it. Because
Yeah.
oil fluctuates according to what's going on in the economy.
Mhm. So, yeah, I wanted to try to keep this chat today to like beginner investing choices. Nothing, not the hype stocks, not the crazy things, not the things that are going to have that volatility, because I want people to know that there are choices that they can build from without any stress, but the opportunity to build wealth. And another option is, that I do use in some of my IRAs is, target dated funds. But even with that, I want whatever you're investing into to get in touch with them, and it takes a little time and effort, but it's your money. You wouldn't you when you think about it that way, you want your money to grow, you want to maximize your efforts, so you have to take the time to put a little work into it, and I think it's worth it, and I'm sure that you will in the long run also. So with a target dated fund, do you have any investments in that in a fund like that, Press?
Me
You said
personally,
no.
no, I don't.
No.
No. My
So
safest investment is VTI. That's where it
yeah,
all goes down. VTI, and I have VTI in my retirement account. I have VTI in every account, including my trading account. I have some VTI sitting there.
so depending on where you do your investing at, if you're doing it at Fidelity, for example, you can invest into FXAIX, which is the Fidelity 500 index fund, as opposed to the one we were just talking about, which is VOO, which is the Vanguard S&P 500 ETF. So there's different ways for you to get exposure depending on what brokerage company you use and what your needs are. If you have an idea, two of the big things that I think are easy, beginner-friendly investments are total stock market and S&P 500 uh, choices like I'm sharing here. So another could be VTSAX. So this is the Vanguard Total Stock Market Index Fund, similar to VTI, which is another total stock market. So these are all ways to get the broad exposure, like we've been saying throughout this hour about five, hundreds, if not thousands, in one investment choice with reasonably low expense ratios and quarterly dividends that are paid to you that you could then reinvest and continue to build.
Or
So
cash
someone
it
put
out if you want the money now. Since you want your money now so much, you can cash it out and dividends out if you want. But I would recommend reinvest them. That's what I do.
yeah.
But a lot of us have that lottery casino mentality. We want our money now, like JG Wentworth. But yeah, just let your dividends reinvest. There are even options on a lot of these brokerages where you can turn it on to where it will automatically reinvest your dividends for you.
Yes. Yes, I have that on. That's called the drip. So there are automated features in these different platforms that can help you to help yourself if you don't want to trust yourself to remember to do all these things. Have your deposit going in automatically. Have your investments automatic. Have the, as Prez just mentioned, the dividends going back into what you're trying to build up so that you're taking some of the choices out of your hands, and do your best to not tap into it, to not tap into it until it is the time that you intended to use these particular investments. So I have somebody dropped in the chat about the SPY. My issue with the SPY is the expense ratio is higher than some of the funds that we've mentioned, and it gives exposure to the same thing. So I would go with something that I wasn't losing because I think the SPY is a 0.09, I think. So with that, there are things
I
that
believe
are
so.
half, a quarter, or even less in with the expense ratio. So I personally would not choose it. I know that there are lots of people that like to trade it, but not have it as a long-term investment. Do you agree with me on that, Press?
I totally agree with you. The SPY is super volatile as far as the price action. It can be up $6 a day, it can be down $6 tomorrow. And unless you got the risk tolerance for something like that, on top of paying the extremely high expense ratio, in my opinion, then by all means, the SPY still has the top 500 companies in it, but it's more of a trader's playground. We trade the SPY. We don't invest in the SPY. We invest in the VTI. I just made up a little rap song.
This is another option that I've seen people, mention in my chat. Why don't I invest into SPDR instead of the VOO or some of these more expensive options. It's just something that was not on my radar. Have you ever heard of this, Press?
I've heard of it, but like I said, when I first started doing my extensive research, it's like I went to a process of elimination and majority rules, and majority of the videos that was coming up was VTI and VOO,
VOO.
and
Mhm.
I pretty much did rock scissors paper with myself as to which one I was going to focus on. I love them both, honest to be honest, but I don't currently hold VOO. I chose to have exposure to the total stock market versus just the S&P. Because if I would have chose just the S&P, then you still have the NASDAQ over here that I would have been eyeing on. But I want a little more exposure into the NASDAQ. But that's a little bit more volatile because it's mostly tech stocks.
Yes. So, how about SCHD or SPHD? Do you have either of those in your portfolio?
No, I don't have those either. Now,
Mhm.
there, my views on those, I don't see any problem with them. But
Mhm.
if I were to get involved in those, now I would like to start a strictly ETF type of portfolio one day, and they will be in there because they pay some nice dividends. I'm not sure as to the frequency of the dividends, but one or two of those do pay a monthly dividend, and the shares are pretty cheap.
SPHD does.
So
Yeah.
you will be able to accumulate more shares to grow your dividend snowball that way. But that's for a whole nother episode.
All right. All right. So guys, I think I'm gonna wrap this up. Thank you guys for tuning in. Thank you, Prez. I love having a co-host. So thank you, Prez, for taking this time out to partner with me on this today. Uh and I hope that we've had a good discussion today. I hope that we answered some questions. Please, in the regular chat of this video, if you have questions you want us to get more in depth in certain things, please drop your comments over there so we can more easily find them. And I just wanted to give some encouragement today that investing is for us all, and it's an opportunity that we shouldn't let pass us by. I will try to go through this video and timestamp some things when we were pulling up the investment calculator and stuff like that, because I want you to be able to find that and look back to it. And I know it's hard to see, it's easier to see us doing it, and but it's harder to imagine in 10 years this is really what I can achieve. But Prez has been doing it for 5 years. I started working full time when I was 19 years old. I'm over 20 years into investing into, 401k, IRA and stuff like that. So I see the results that time, when you really put in the time long term of what you can accomplish. And I see Prez it's only been a few years, but I know he can attest to the same thing, that just being consistent,
Mhm.
that you can achieve great things. And these numbers in the calculator, you can achieve much more than what we just shared with you. Um, but you have to get started, you have to be consistent, you have to give it time, and you have to sometimes deal with a little bit of up and down, but depending on what you're investing into, it doesn't have to be a painful experience, but it's something that I want us to all uh, take advantage of for ourselves, for especially if our younger self is only working to take care of our older self. And if we're in a good place, we can give our families a head start. Prez is trying to encourage his siblings and stuff. I think that is a great thing. I hope that they open their minds and, you know, catch our live and give us a chance, because we're only trying to help bring everyone along in this journey with us.
Siblings, co-workers, elders in the family, it's not too
Mhm.
late. It's not too late to get started. And as far as dealing with the fluctuations and price action and all of that, we just went through a 18-month long slow bleed out bear market, but we stayed consistent. And before you know it, everything was green. And to deal with that downtime, find some type of investing community. There's plenty of them out here. There's plenty of them out here. That way you have someone else's point of view on how they're dealing with things, and it can possibly change your views on things to keep you consistent. You have an accountability partner to where as though, oh yeah, we're doing this $5 challenge. And next thing you know, it had been 3 years and we green.
My $10 investing into VTI started off as a 10-week challenge. And now, like I told you guys earlier, I'm over 500 days into a 10-week challenge that a challenge for me is just a way to just give something a chance and just jumpstart you and just get you on track with it. Just like with working out, you're not going to go to the gym one time and have a six pack and drop 5 pounds. But if you've ever had that struggle, you know what you have to do. You have to be consistent. You have to be walking. You have to adjust your diet. You got to drink your water, and you have to do it for a good amount of time before you say, oh, I'm starting to see the results. Same thing with your investing. You have to give it a chance, and you have to make sound investment choices. That's why I wanted this conversation today, not to be anything about we're going to make fast money, but be consistent and build a foundation. If you want to do something a little, different, a little more adventurous with a smaller percentage of your portfolio, we're of the mindset, do that with small bits, but keep a large majority into the things that we try to keep into this live today. But people in the chat are attesting to this. I see Al Daly is here saying that they've been investing for over 30 years and it works. But
Wow.
listen, we gotta get started. We got to get started. We cannot just let time pass and let
Shout
it
out
be
to
too
Al,
late.
30-year veteran.
But I'm going to stop rambling. Thank everyone for tuning in. And, maybe I will be, Prez, you stream this on your channel right now too?
I think so. I
Think
haven't even
so?
looked. It
Okay.
might be.
Well, listen, either I'll maybe in the future, tune in because I might be on Prez's channel. Prez might come visit me over here again, or we might be streaming together, but we'll be here bringing you our weekly updates and stock market news and videos, and maybe some more lives where
Can we come
you
back
guys can.
next week?
Can we do it again next week? Sure. What's the topic for
Yeah.
next week? Guys, anybody in the audience have a topic they want us to work on for the week so we can have it? I have a holiday tomorrow. Let me know if there's something that's you have in your minds.
What comes after VTI? Say, okay, I bought VTI. Now what?
Listen, I'm telling you guys, if that's all you do, that is a great start. But let me see. That's it. That's it. I think I'm ready to wrap it up. So I'm going to just go to my outro. Thank you guys for tuning in, and we will be back soon. Hit the notification bell, subscribe to both of our channels so that you can make sure to be alerted. But we'll try to if we're going to go live, we'll try to post it at least, a day or two ahead of time so that you can know when to tune in. So I'm going to wrap it up. Thanks, Prez. I had a great time chatting with you.
No problem.
All right, bye.
All right.
And to investments, she make a lot on YouTube. Lisa J Stocks. Lisa J Stocks, that's the channel. Hey. If you wanna make some money, visit Lisa J Stocks. Yeah. You will make a lot. If you wanna make some money, visit Lisa J Stocks. Okay. She'll make it pop. If you wanna make some money, visit Lisa J Stocks. Yeah. Hey. You will make a lot. If you wanna make some money, visit Lisa J Stocks. Hey.